Hi everyone, welcome back to the channel. So in our previous video, I definitely explained what inventory and what inventory valuation is, but now I didn't go and do examples of how to actually go about the FIFO method, the weighted average method, and the specific identification method, right? So in this video, we are specifically going to just do past paper questions, whereby we'll be looking at those methods of stock or inventory valuation, right? So I'm just gonna quickly zoom into these things just in case some can see, so you can take a screenshot if you want to copy it down. You just pause the video, then do that. So this is just the question, right? Then these are the information that you have there. Just zoom out a little bit. Then this is just the information that you have right there, right? So I'm just gonna give you a sec. You can pause, take a screenshot, then copy it down if you want to copy it down. But yeah, so now let's get into it basically. What do we have? They're saying that we have Packer's suitcase shop. They say that Charles Packer sells travel suitcases and then the year end is 30 June 2020. They say that what is required, we need to actually calculate what? The value of the closing stock, the cost of sales, and the gross profit. Charles suspects that suitcases have been stolen, provide a calculation to support this. He's concerned. So basically, that's what they're doing. So in this question, we're going to calculate for the closing stock, the cost of sale, and the gross profit, right? So I'm just going to quickly zoom into the information that we have right there, since we know what we are basically looking for, right? Now, let's start with it, right? So first things first, they want us to calculate what? Sorry, they basically want us to calculate the value of the closing stock. The first one, they want us to calculate the value of the closing stock. So let's calculate the value of what? Of the closing stock. Now, listen, when it comes to your closing stock in your FIFO method, by the way, this thing, if you can read that question carefully, it is they use the FIFO method. So the first in and the first out, right? First in, first out. So with first in, first out, it explains itself that the orders that came in first are the ones that are going to leave first, right? So meaning that the ones that have been in the store for the for a long period of time are the ones that have to leave first, compared to the ones that just arrived now in the business, right? So now let's calculate the closing stock, right, for June basically, and see um what value we come about. Now we know that now the closing stock right there, it's what? It's 496, right? Because the units, it's 496. So with FIFA, what you do is that we're going to have the bottom up calculation. So we're going to do the bottom up calculation. So meaning that we're going to have 496 units, right? Remember, when they closed the business, they had 496 units basically, right? But now what happens is that now there are purchases that they made. So for us to get the value of the closing stock, we need to basically do what? We need to subtract um the purchases of March, right? My bad, not March, my bad, for June here, for June. We need to subtract the purchases that they made for June, right? So now what's basically going to happen? Remember that we're trying to get 496, right? So now I want you to see something with this one, right? So now with the 496, now what is it that we're trying to get basically? What we're trying to get is that now, remember that in June, how much of the purchases did we make? We bought 450 units of the bags that they sell, right? Since they sell travel suitcases, right? They bought 450 in June, right? But now something you need to remember is that from this 450, 25, right, as you can see here on the returns, so returns from June purchases, meaning that the company, it literally returned 25 travel suitcases back to the supplier. So we need to subtract the 25 basically, right? So now when you subtract the 25 basically, it's basically going to give us what? It is just going to give us 425. So in 425, these are the units of stock that we had in June, right, in the business. Because remember, we purchased 450, but we turned back 25 of them. Okay. Now I want us to make something clear. As you can see that in total, at the end, we had 496 in the stock, right? But now if you can realize that from June, we only had 425. So meaning that there's still an amount of stock that is still left, basically, right? So remember, if June, all of them are still at in the business, so meaning that we still have the 425 because they still just came in the business. So we still haven't sold them, right? So they are in the 496 units that is still left in the business. So now since you only have 425, there is an amount that's missing to make up the 496 of stock that is left, right? So how much is basically left now? That's what now you're gonna just say 496 minus 425, basically, right? And that will give you 71, right? It will give you 71. So meaning that there's an amount of stock that is 71. So meaning that if you come here, June, we didn't sell anything basically from June, right? We didn't sell anything. Why didn't we sell anything? Because the closing stock, we have 496 units, and the stock for June that they had is 425. So this 425, meaning that it's included in this 496, that is still left in the business at the end of June. But now this 71, where is it coming from? This 71 will come now on the month before June, where they are no, at the period whereby they bought before June, right? So remember they bought also at in March 2020. So in March 2020 they bought 875. So from the 875 that they had, they didn't sell. So 71 units of that amount didn't sell, right? It didn't sell. Remember, we do a bottom up. The reason why we're trying to get the value of the closing stock is that we need to find the units that are literally left from where we purchased them, right? So remember, if we have 496 at the end of the month, it means that now this 450 it's still there basically, but minus the 25 that we returned, which is 425. So meaning that the 425 is still in the company. But now, remember, we have 496, not 425. So meaning that there's stock that came before the one from June that is still also available. And we're gonna go to March, not December and not September 2019. Because remember, it's first in, first out. So the ones that just got in the company now, that we just bought now, are the ones that are gonna be sold last. Right. So I hope that part makes sense right there. So now it means that now we have what? For our closing stock, the 496, we know that we have what? We have 425 units from the June purchases, which is what? 3,040, right? And it's going to give us an amount. Then we're going to come back again and take the 71 units. And the 71 units was the stock from March. And for March, we bought it for 2,930, right? So if we do our maths, right, for the 425 times 425 times 340, what do we get? We get 1,292,000, right? That's how much we get. Then with the 71 now times 2,930 rands per unit, right? Remember, these ones are per unit, right? And these are the units that we have. So we need to multiply it, right? So that's why we're multiplying it. So we have 71 times 2,930. Then that is going to basically give us 208,030. All right, 208,030. So now, what is the value of the closing stock? The value of the closing stock of the 496 units is basically just going to be, so we're going to have 10, another 10, then 5, then 1. So we basically are going to have 1,500,030. So this is basically going to be the value of the closing stock because that is the stock that is left in the business that we haven't sold, right? Remember, it is the 425 units from June that we haven't sold. Then the 71 or the rest of the units, which are 71 units, are from March because remember the stock from March is the ones that are still there, some of it, right? Some of it, the 71 units, it comes from it, right? Because we're dealing with the first in, first out method, right? So now I'm just gonna write down the 1,500,030 right there on the side. And that is what this is our cost of sales. Cost of sales. So I hope that was very informative right there. All right. So remember, first in, first out, you just need to calculate the stock from bottom up. So if we had 496, that was in the company, we need to start with the last month where they bought, count how many of the stock can we get from there. We only can get 425, but the total amount was 496. So we need to go to the month before it or the time they purchased before they purchased from June. Then we can see that the rest of the units are going to get it there. Right. So yeah, so I'm just going to erase it and go to the next question basically. All right. Just quickly do that. Right. Now, let's go into the second question. The second question, what they asked us, no, this is not my bad. It's not cost of sales. My bad, my bad. This is basically the value of closing stock, not this is the value of closing stock. Closing stock. Those two things are two different things, right? Then now they ask us to calculate what? They ask us to calculate the cost of sale. They ask us to calculate the cost of sales. Cost of sales, right? So now, how do we get cost of sales? Now, here's a formula that we use for cost of sales. For the cost of sales, we're going to take the opening stock. We take the opening stock. Then we are going to add your purchases. So you're going to add your purchases. So meaning that we're going to add the inventory that we bought, right? Then after that, we're going to subtract the closing stock. So this is the formula that you're going to use now. Right. So now, how much was our opening stock? So you can see here, opening stock we are given. It is what the total is 913,000. So it is what 913,500. That is our opening stock. What about our purchases right now? What about our purchases? Right. Then remember with purchases, how much did they purchase? They literally purchased 8,460,000. So they bought what? They bought a stock of 8,460,850. But now I need you to understand something. From the purchases that they made, we literally returned some of the stock, right? So if we returned, we need to subtract those returns, which is 76,000, right? Then after that, we also need to subtract the closing stock. And the closing stock, we have the value right there. We calculated it. It is 1,500,030, right? That is the amount that we have right there. Then the cost of sales now is going to be how much? The cost of sales is basically going to be 7,798,320 rands, right? And that right there, it is what? It is the cost of sales. So we use the formula opening stock plus your purchases subtracting your closing stock. But remember your purchases, you must always remember that if you have returns, you need to subtract your returns from your purchases, right? So I hope that that made sense right there. So now we're gonna have our cost of sales. So we're gonna have our cost of sales. So I'm just gonna maybe write it down here. So you're gonna have 7,798,320. So I don't basically forget it. Now we go on to the next question. All right. The next question, what did it ask us to find? It asked us to find the gross profit. Right. How do you get your gross profit? This one, it's a lesson that we are going to take back to, we're going to take back to basically income statement. Your right. So with your income statement, how would you get your gross profit? We got our gross profit by doing what? By saying our sales subtracting our cost of sales. Right. This is how we got our gross profit in our income statement. And that's the same thing that we are about to do here. So how are we going to get our sales? First things first. We have a note right there at the bottom, right? They say that 3,050 travel suitcases were sold at 4,200 each. So meaning those are our sales right there. So meaning that 3,050 of the suitcases that we sell, they sold, and each one of them costed 4,200 each. So that is the amount of our sales. Then now we're going to subtract it by the cost of sales, which was what? 7,798,320. right? Then that will basically be equals to what? It will be equals to 5,011,680. So 5,011,680. So that's basically the amount that you're gonna get there. Right? 5,011,680. Right. So I hope that it makes sense right there. So now that's basically the question that you can be asking yourself basically. Right. So questions that you're asking yourself, they should be answered right now from the last previous video that you looked at, asking yourself how do we calculate stuff like that. So now that is done, I want us now to look at the next one because I think also it is needed. Right. Now, sorry. Now, what they ask us in the question, they're saying that Charles suspects that suitcases have been stolen. Provide a calculation to support his concern. So now, for us to see that there were items that were stolen, right? So we're gonna calculate the stolen items. So with stolen items, we're gonna basically look at the units, basically. Same thing that we did with getting the cost of sales. It's kind of similar to how we're gonna get stolen items or missing items basically. So now this is how we get it. We're gonna get our opening stock. So our opening stock, right? Opening stock. Then after our opening stock, we are going to add our purchases. We're gonna add our purchases, right? We're gonna subtract our returns, right? After that, this would basically give us what? It would give us the amount of the goods that are available for us to sell. So these ones would be what? It would be goods that are available to sell. Goods that are available for sale. For sale. Right? Then after that, we are going to subtract our sales. So we're going to subtract our sales because those are the things that we sold. Then now, when we subtract our sales, when we subtract our sales, we're going to get the number of items that were stolen. Of stolen items. Let's get into it and I'll explain it as we go down. So now remember the opening stock 420 units right there, right? It's given 420 units. Here we need the units. We're not gonna basically look at the values because we need the units that were stolen. 420. Purchases. How many purchases did they make? They made 3,155. It's the total purchase right there. 3,155. Returns. We return 25 units. So you're going to subtract 25. Then basically the units that were available for sale are how many? 3,054. 3,054. It's the goods that are available for sale. So meaning from the opening stock and what we purchased, that's the stock that we could have sold. So meaning that's the stock that we had before we even sold anything. But now, how many did we sell? We only sold 3,050. 3,050. So obviously, if we have sold 3,050, how many do we have left? We have four that are left. Right? We have 4 units that is left. But now, that four, somebody's asking that what if it's the four that we have in the store? Maybe somebody might be asking, or after we actually sold, uh, why what if the four they didn't buy them? But now, uh, um, remember that these ones are the ones that are stolen because if those are the goods that they had for sale, then those are the goods that they were supposed to sell. So meaning that they were supposed to sell everything. So if things were not sold and there's stock that is remaining, right? That means that it was stolen, basically. So that's what that's how we basically get the value right there. And I hope it basically makes sense. Right. So that's the method on FIFO, and I hope that it was it was people understood what I did here. Right. If you didn't understand, You can drop your question in the comment section down below, and I'll definitely look at it and actually answer the questions that you basically might have. Right. So now let's go to the next one. So here we're just gonna be doing calculations basically. Sorry, I'm just gonna move this here. We'll look at it after, then move this one a little bit lower. Cool. So you're gonna look at all of those things, don't worry. But you're just gonna go step by step. Step by step. Now, for those that want to take a screenshot, there it is right there. You can quickly take a screenshot. Um, that's too big. I think we can. I think that's where it ends up. So yeah, take a screenshot. Basically, um, yeah, see what you basically can do. So now, let's get into this one, right? Actually, let me zoom it like this so that you can get this way. So these ones are the questions. That's the question. Then these ones are basically the information, right? So information, take a screenshot. Then um, your information or your questions basically. But the question they're saying that we must do what? They're saying that you are provided with information relating to Hot Wheels for the 3 months ending 30 September 2020. The business trades in motorbikes and helmets. Mike, the owner, wants to assess his stock records before any price increases during the year. Then the first things first, they say we must calculate the value of the closing stock using the weighted average method. Then they say that they suspect that there are helmets that are being stolen from the shop despite security cameras being installed, basically, right? Then we must provide a calculation to verify his suspicion. Suspicion, right? So that's the units that we have right there. So now let's look at the question and see how we would basically go about it. Now, we are given basically, we are given that now these are the stock balances, right? We are given the opening stock, they're also given the closing stock right there. Then here are the purchases. They also tell us that 5 defective helmets from the purchases in August 2020 were returned to supplier for a full refund. So meaning that for the purchases in August here, they literally returned 5 helmets, right? They returned 5 helmets. And then now after that, they say that 85 helmets were sold at 600 rands each. So now, first question, what did they ask us to do? First question is that they asked us to calculate the value of the closing stock. They asked us to calculate the value of the closing stock. So let's do that. So value of closing stock. Right. So now how can you get the value of the closing stock? Remember the formula. We have opening. Oh, by the way, this is the weighted average. This is a weighted average question. I think it literally was said in 3 point in the question right there that it's a weighted average method. So we're gonna be using the weighted average method, right? So FIFO we done, now we're going to the weighted average. So we have the opening stock, then we have what we're gonna add our purchases. You always add your purchases, then you're gonna subtract the returns. But now remember, I said that with now the weighted average, we're dealing with an average. So we need to divide by also what? The opening stock. Again, opening stock plus the purchases minus the returns. Right. So the one on top is basically the amounts. It's the rand, right? It's the rands. It's an amount. Then the one below, it's for the units. So we use units for us to get the average. Right. So now let's get into it and see how we would do it. So the opening stock, how much is the value? It's 15,000 rands. So we have 15,000 plus our purchases. How much do we use for our purchases? We had 39,300 right there. That's the total. We have 39,300. We're gonna subtract the returns, right? How much of the returns now are we going to have? Now listen, 5 defective helmets from the purchase in August or August anyhow you pronounce it. We have 525. So you're gonna have 525, right? And that right there would give us what? Would give us 2,625, right? Then you're going to divide the amounts by what? The units. The opening stock, how many units did it have? The opening stock was 30. Then you're gonna add it by what? You're gonna add it by 75. The total number of units that were bought, 75. But they returned five defective helmets, subtracted by five. Then right there and then you would get the average price per unit. So remember, you're gonna get the average price per unit, and you're gonna get it as 516,75. I hope the calculation there was correct. Then obviously now since we have 516 um comma 75, now they say that they want the value of the closing stock, right? So if each and every unit was sold for was actually 516 rands, comma 75, we need to come and multiply it by the number of units that are left, and the number of units that are left are 12. So meaning that for our closing stock we had 6,201 as our closing stock. So the value of our closing stock is just 6,201. I'm just gonna put it there on the side. Right. So I hope this formula makes sense. So you must make sure that you write down this formula. It is very, very helpful, and you are basically going to need it. You're going to definitely need it, right? And this is for the weighted average method. All right, so just gonna erase it, then we're gonna head into the next question. Now, next question, what is it? What is needed from us? They're saying that we need to calculate to verify that stock was stolen, right? We need to calculate to verify that stock was stolen. So meaning that we need to get the stolen items. We need to make to see if they are stolen items, right? I don't think I need to write the formula again, but you do know how do you get our stolen items? What do we start with? We start with our opening stock, the units, it's 30. And what do we add? Sorry, what do we add? We're gonna add our purchases, which is 75, right? Then we are going to subtract our returns. We returned five helmets, so you're going to subtract the returns. Then we're basically going to now subtract the closing stock too. You're going to subtract the closing stock. Closing stock was 12, right? So you're going to have subtract 12. And now we're also going to subtract the sales, right, that we made. We sold how many? So if you can see here for the sales, they said 85 helmets were sold. So meaning that we're going to come and say 85 right there. Then now if you do the maths right there, you would see that 3 units were stolen. Right? The formula is always the same for you to find the missing, right? So make sure that you remember that formula that I gave in the first in, first out formula, right? So that's basically how you would get it. By the way, most of the time people don't know the points for this. Let me just quickly give you all the points for this question. The question whereby they ask you, what can Mike do to improve the internal control of the stock? One, they can do regular physical stock counts. They can do it regularly, right? They also can place tracking devices on the product or security price tag. So now, let me explain that one. You see, go Pick and Pay these days, they have some little about like black stickers that they black or white stickers that they put on chocolates. Those stickers, when you leave with a chocolate, it beeps, right? When you leave at the door, it beeps to alert them that something was stolen. So they literally can do that. Uh, Three is that they can improve the security at the gates. So that's literally what they can do. Or they literally can inspect. They can inspect the items and check the sales slip, right? You see when you're leaving, when they check the slip and things that you bought, they can do that to check, right? And they also have to do division of duties in the warehouse or in the business, so that not only one person is working in there. Because if one person is working, then it means that they might be stealing. So at least if it's different people, because it's division of duties now. They know that with stock it won't be stolen like that, since obviously sometimes the stuff can be suspects basically, right? So those are the things that you can note down right there. So I hope that everything was understandable there. So yeah, now let's move on to the next one. Hope it's not that far. Okay, here it is. I'm just a little bit cool. Now we have this one. This one is still the weighted average method, but now I want us to look at the periodic inventory. Like I want us to see how we can calculate the value of the closing stock, but with the periodic inventory. Right. So now let's see. Now this one, it's because it has, your carriage per units and also. So I just wanted to us to look at the ones that has carriages and more questions. Basically, I know it might not be clear. I'm hoping that it is clear. I'm hoping that it is. So I'm just going to read it out. It says that the following information was extracted from the records of Rue traders for the financial year ended 28 February 2021. The business uses weighted average method and the periodic inventory system to value the stock of school bags. Required, we are only needed to calculate the value of the closing stock. So now how do we get the closing stock with this one? Remember, the formula doesn't change with the weighted average method. But now this time around it's going to be different. How is it going to be different? We have our opening stock, right? We have our opening stock, right? But now obviously we're going to add what? We're going to add purchases. But now here's where the difference comes in. We are going to add the carriage. So the carriage that we have right there, we are going to add it. We are going to add the carriage. Let me do it this way. Let me do it this way. My bad, guys. Let me just write it in this way. We have our opening stock. So I'm gonna say opening stock. I hope it makes sense. Just gonna say opening stock because I remember space. We're gonna add our purchases. We're gonna subtract our returns. Now we're going to add carriage, and we're also going to add custom duty. Right. Then obviously we're gonna do the same thing below. We're gonna have our opening stock, our purchases, returns, you add the carriage, then you add the custom duty. Right. Now, remember the one on top with the weighted average, it is in rands. Remember, rands. Then the ones below, it's the units. Because remember, we are dealing with the weighted average method. Average, anyhow, anywho you want to pronounce it. Right. So how much is our opening stock right there? My bad. Our opening stock, we have 11,280. So you're gonna have 11,280. We're gonna add now. We're gonna add our purchases. With purchases, we can see that we have what? We have, oh, my bad. Yeah. We have 239,400. 239,400. Then now, on top of that, what are we basically going to do? We're going to subtract our returns. Do we have any returns here? Let me see. Yes, we do. 40, they're saying here, listen, 40 school bags bought in May 2020 were donated to needy learners at a local school. Now, let me explain something. Donations are taken as you regard them as returns basically because we didn't sell them. So I don't want to say we returned them, but we donated them. So anything with donations, you also need to subtract donations. By the way, you must subtract your donations because donations are deducted from the actual cost of sales, right, of each item because we basically gave them away. We didn't sell them, right? So since we didn't sell them, we need to subtract them. So if 40 school bags, my bad. So if 40 school bags are basically here, if 40 school bags in May, so we go to May, each school bag, it costed what? It costed 82, 82 rands basically per unit price. And also it had a carriage of 3 rands. So how would you calculate it? Basically, you might be asking yourself. So this is how you're going to do it. Now check. In May, these are the bags that they took out. 82. That's the unit price. But we need to add the carriage. And the carriage is what? It's 3 rand. So meaning that each and every bag cost 85. But now we did what? We donated 40 of them. So if we say 85 times 40, what do we get? We get 3,400. So meaning that we're going to subtract those donations, which is 3,400 right there, right? So I basically hope that it makes sense. So here when they say when you hear the plus carriage and plus custom duty, the carriage was calculated because as you can see the carriage here, it was also added here, and that's how they got the total amount. So don't be shocked on why I didn't add it on the one on purchases because they already had added it, right? So now that's what we have right there. Now we're gonna subtract the units. So the opening stock for units it had 150. Then obviously for your purchases, we had 2,700. So we have 2,700. But now remember we donated 40, so we need to subtract 40 right there. All right, so I'm just going to remove this just to write the answer. Then after that, now how do we get our answer? We're basically going to get our answer by putting that in our calculators, obviously, Kamo. Then how much are we going to get? Somebody might be asking themselves. Uh, so for the answer, we get 88. But now the 88, remember, it's the what? It's the cost per item, right? It's the weighted average cost per item. But closing stock, we have 635, so you're going to multiply it by 635. And when you multiply it by 635, what do we get? We get 55,880. So that's how much you would get. So that's how you would basically get your value of your closing stock right there, right? Then it comes to um the value of your cost of sales, you know what you do. I gave you the formula, so make sure that you always use it, right? So yeah, so I just wanted to do that. Now let's look at the last one. The last one is basically what? The last one is the specific identification method. This one is the most simplest one of them all. You'll see when we do it right now. um and you'll see what I'm basically talking about, right? You'll see what I mean by what I'm saying. Now check. They're saying that smart cars traders, they buy and sell BMW cars, right? The business actually uses a specific identification method for stock valuation, and the financial year it basically ends on the 30th of June 2020, right? Then they basically say that we need to calculate the selling price per BMW 3 Series sold during 2020 financial year, right? Now, see something. Like, given the information right here, see. If we're going to now get the selling price for a BMW M3, we go to BMW 3 Series. No, not M3. You see now. See now, I'm thinking of M3s now. It's just the BMW 3 Series, right? So go to 3 Series right there. Like that. So go to a 3 Series. So if you can see there, on your 3 series, you need to calculate the selling price, right? So if you can see that now, the cost of sales for the total sales, my bad, the total sales, because they're asking for the selling price, so how much they sold it for. So you need to look at the total sales. So the total sales were 4,340,000. Then we're basically going to divide it by what? We're going to divide it by the number of the BMW M3 series. Not M3, Camo, 3 series that we had sold. My bad for that, guys. So 4,340,000 divided by 10, it tells us that one BMW 3 Series is what? 434,000, right? So meaning that that is what? That is the selling price per BMW 3 Series, right? So that's what it means. Remember, specific identification method doesn't have your carriages, doesn't have all of that. It's just the amount. The amount that you see is the amount that you actually get, basically. So that's the thing right there. Then now, so I'm just gonna write it here, 434,000, right? Then what do we have next? They ask. They say that calculate the value of the closing stock on 30 June 2020 using the specific identification method. Guys, I want you to understand something. This thing doesn't change. The formula doesn't change for you when you're calculating your closing stock. You're gonna have your opening stock. You're gonna have your opening stock. You're gonna add your purchases. Then you're gonna subtract, my bad, subtract your returns. Actually, my bad, guys. Once again, let me write it like this so that we can have space. So opening stock, um, we basically have also, we have to add our purchases, my bad. We have to add purchases. We have to subtract our returns. Then we need to also what? We need to also subtract. Remember, we need to subtract our, we need to subtract our, we need to subtract our value of closing stock, basically. So we need to subtract the value of our closing stock. So basically subtracting closing stock. Then you're going to get the cost of sales. Now, what was the opening stock basically? The opening stock was, well, actually they didn't have any opening. So opening was zero here because they literally just started in that financial year, right? They're just doing in the financial year. Um, in the financial year basically. See that, sorry about that. All right, so in the financial year, we have zero. Purchases now, check. They bought 10 BMW 3 Series, 15 BMW 4 Series, and 12 BMW 5 Series. But they returned two BMW 5 Series, right? 5 Series. So meaning that they returned five. So meaning that now we have to do that calculation. So now let's get into it and see. Purchases, right? So net purchases, actually they gave it to us, right? So from everything here, basically, from your purchases and returns there, because I think they subtract 377. Yeah, then they subtracted it. So they basically gave us the net purchases. So obviously they, meaning that for the two of them, they already calculated it as 16,500,000, right? 16,500,000. So now, what did they ask us? They asked us for the value of the closing stock, right? From the 16,500 now, we need to subtract the closing stock. But now, this time around, we do not subtract our closing stock, but we subtract the ones that we had sold, basically, right? So we subtract the ones that we have sold. Wait, sorry guys, sorry. Me, I'm basically calculating the cost of sales here. My bad, my bad, my bad. I'm so sorry, my bad. Um, so here, what they have is that now, what they want us to do basically is that they want us to calculate the closing stock. So now check. If we bought 10 BMW 3 Series and we sold 10, it means that BMW 3 Series were not there at the end, so we cancel them out, right? Then now, BMW 4 Series, we basically had four. We had 15 of them, but we sold eight. So meaning that for BMW 4 Series, 4 Series, we literally have how many left? We have 15 minus 8, which is going to give us 7 units. We still have 7 units. Then our BMW 5 Series, how much do we get? We had 12, we bought 12, but we returned 2, so we have 10, and we sold 5. So we still have 5 units left, right? So meaning that now we need to calculate the unit of your BMW 4 Series and your units for BMW 5 um um 5 Series, right? Then how do we get that? We need to get now the average cost of sale. Basically, we need to get the average cost of sale for each and one of them, right? Each one of them. So now as you can see, the unit price they gave them to us, the unit prices. So obviously we have I'm sorry, we have 7 units of BMW 7 Series. So you're going to multiply it by what? 480,000. Then we also have what? We have 5 series that we also had 5 left, and each one of them costed 620,000. So how much do you get there for the both of them? So let me just do this. So we have 7 times 480,000, and that right there will give us 3,360,000. Then after that, how much do you have? We also have 5 times 620,000, and that also gives us 3,100,000, and that in total will basically give us 6,460,000. And that right there is going to be the closing stock of that, right? So my bad guys for making that mistake right there. I was literally calculating the cost of sales, whereby they literally wanted the value of our closing stock, right? And that right there is how you calculate it. And that is it, guys, for today's video. So I hope that everybody understood how you now have to do the questions if they were to be asked to you, right? So yeah, that's it for today's video. If you did enjoy the video and did understand it, you can give it a like. And if you have any questions for me, just make sure that you drop the question in the comment section down below. And today, that's it for me, guys. I hope you enjoyed the lesson, and I'll see you on the next one.